Good evening, everyone, and welcome to this evening's Introduction to Bookkeeping revision session. If I could please ask that you keep your microphone on mute throughout the session and use the chat box in order to ask any questions and to participate in the session. So this evening, we're going to be looking at task 9 of the assessment, which is processing recurring receipts and payments using a digital accounting software system. We're also going to be looking at task 10, which looks at transferring figures from the day books into the general ledger and the subsidiary ledgers. And we'll also be looking at task 11, which looks at balancing off the general ledger accounts. Okay, so first of all, we've got task 9. So as I say, this one is looking at processing recurring payments and receipts within a digital accounting software program. Okay, so the company where you work has invested in a new accountancy system and you are part of the project team. You are currently checking what is in the old system, so this can be correctly entered into the new system. You have noticed that a recurring journal in the old system needs to be amended because you've recently received correspondence from the supplier of a price increase. So we're told now that the water rates have increased to £120 per month, and this begins on the 26th of May. We're also told that there's no VAT on water rates. Brilliant. Okay, I can see someone's already put an answer in the chat box. Brilliant. Good. Yeah. So the first part of the task, we need to show the necessary entries into the cash book. And yes, you're absolutely right. It would be the cash book payments. So the water rates is of course a payment that is going out of the business bank account, so therefore it's reducing the asset of cash in the bank, so therefore it'll be the cash book payments. Brilliant. Okay, so now we've got to enter the details of the recurring payment into the accounting software, and you can see here at the bottom that we've got a pick list that we can choose from. So looking at the information of the recurring payment, what is the start date? What will we enter here? Good, Catherine. Yes, brilliant. Yeah. So we've got the 26th of May. Good. 26th of May. And then what would we put as our details? Water, good, yeah. And then what about the net amount? £120, good. And then what did it say the frequency of the payment was? I'll just scroll back up. Monthly, good. Yeah. And then what would we put underneath the VAT code? Yeah, so looking at the pick list, the option that we have, yeah, you're right. So it's VAT 0 to 0%, good. Excellent. Okay, so moving on to the next task. So we're going to be looking at task 10 of the assessment now, which looks at transferring the day books into the general ledger and the subsidiary ledgers. So just a bit of a recap first, a little bit of a reminder. So remember, the sales day book consists of all our sales invoices. Now, the totals of the sales day book will be posted to the relevant accounts within the general ledger. The gross column will be posted to the debit side of the receivables ledger control account. So remember, the receivables ledger control account contains our credit customers. So therefore it's an asset account. So an increase in an asset account will be entered onto the debit side of an account. So the gross value is going to increase the amount that our credit customers owe us. So therefore we debit the control account. Now, the net amount we would credit to the sales income account. So remember, an increase in a sales income account or in any income account, we need to credit the account because it falls onto the click side of our dead and click. Now, the total of the VAT column in the sales day book will be posted as a credit to the VAT control account. Remember, the VAT control account is a liability account, so any increase in the liability will be entered onto the credit side of the account. So VAT on sales, we need to pay over the VAT amount over to HMRC, so therefore it's going to increase the amount that we owe them. Now, as well as posting to the general ledger, we would also need to post to the relevant subsidiary ledger. So in this case, it would be to the receivables ledger, and we would post it onto the same side of the account. But remember, within the subsidiary ledger, you don't need to post a double entry. It would just be one-sided. Then we have our sales returns day book. So this is where all the sales credit notes will be listed. Now, the total or the gross total would be posted as a credit to the receivables ledger control account, because the sales return would reduce the amount that our credit customers owe us, therefore reducing the asset. We would debit sales returns because it would increase the expense, and that would be at the net value. We would also debit the VAT account because the customer has returned goods to us, it therefore reduces our VAT liability to HMRC. So we debit the VAT account. Again, this return or the details from the sales returns day book will also need to be entered into the individual credit customer's account within their subsidiary ledger. Then the discounts allowed day book. So remember, this records all prompt payment discounts that we have offered our credit customers in order to encourage them to pay us early. So any of our credit customers that take advantage of the prompt payment discount will be entered into the discounts allowed day book. Now, the gross total would be credited to the receivables ledger control account, because again, this is going to reduce the amount that our credit customers owe us, therefore reducing the asset. We would debit the discounts allowed account because it is an expense account. So it's increasing the expense, therefore we debit it. And then we also need to debit the VAT account because it's going to reduce the amount of output VAT that we need to pay over to HMRC. It's going to reduce that VAT liability. And again, this will also need to be replicated within the subsidiary ledger as well. And then the purchases day book. So the purchases day book contains a list of all our purchase invoices. So all the credit purchases that we've made to our credit suppliers. Now, the gross total would be posted as a credit to the payables ledger control account. Remember, the payables ledger control account are a liability account because we owe our suppliers money. So to increase a liability account, we need to credit the account. We would also need to debit the net amount to the purchases account. Purchases is an expense account, so we need to increase that expense. We would debit the VAT account because any VAT on purchases, input VAT, we're able to reclaim from HMRC. Therefore, it's going to reduce our VAT liability. Again, we would also need to enter this into the individual supplier's account within the payables ledger, within the subsidiary ledger. And then we have the purchase returns day book. So this contains all the purchase credit notes. So the gross amount would be debited to the payables ledger control account in order to reduce the liability or reduce the amount that we owe our credit suppliers. We would also credit the purchase returns account. So purchase returns is seen as an income. So we would credit the account with the net value. And then we would credit the VAT account because we would need to reduce the amount of input VAT that we reclaim back from HMRC. And again, we also need to enter this into the payables ledger, the subsidiary ledger. And then we've got the discounts received day book. So this is only prompt payment discounts that we've taken advantage of from our credit suppliers. So the gross amount of the discount we would debit in the payables ledger control account, again, to reduce the amount that we owe the suppliers. We would credit the discounts received account. So discounts received is seen as an income account. And then we would credit the VAT liability account, because again, that's going to reduce the amount of VAT that we can reclaim back from HMRC. Okay, so let's move on and have a little look at a task now. So the following credit transactions all took place on the 31st of May and have been entered into the sales day book as shown below. No entries have yet been made into the ledger system. So we can see here that we've got an extract from a sales day book, and we've got some different credit customers. And then we've got what each credit customer owes us, and then we've got the total amounts as well. So part A, it says what will be the entries in the subsidiary ledger, in the receivables ledger. So remember what our receivables ledger is. It contains a list of all our individual credit customers. So the account name, what would we have first as the details in the account name? Good, yeah, it would be Rome Limited. And what would we enter as the amount? 120, good. And then would that be a debit or a credit within the receivables ledger? A debit, excellent, yeah. So it's going to be a debit because it's going to increase the amount they owe us, or it increases the asset. Okay, so what will we put as the details for the second one? Good. Yeah, so it's all the individual customers. Good. So what would we enter as the amount? Sorry, I'll scroll back up. 180. And again, would this be a debit or would it be a credit? Again, yes, it's a debit because it's a credit sale, so it's increasing that asset. What would we enter next? Good, yeah. And what would the amount be? Brilliant. Yeah, and then what would we enter? Oh, sorry, would that be entered as a debit or a credit? A debit as well, yeah. And then what would we enter for the last one? Yeah. Yeah, and what would the amount be? Good, 960, good. Yeah, so it's always the gross value that we enter into the subsidiary ledger. Good, and yes, it will be a debit. Brilliant. So 960. And it's a debit. Good. And then part B, it says, what will be the entries in the main ledger? So in the nominal ledger. So what would the account name be that we'd need first? The receivables ledger control account. Brilliant, Catherine. And what figure would we be looking at posting in there? Excellent. Yes, the 1,560. So the gross amount. Good. Yeah. So we have the receivables ledger control account, and we're posting, oops, the gross amount. So 1,560. Would that be a debit or a credit to the receivables ledger control account? Brilliant. Yeah. So it will be a debit, because again, it's going to increase the amount that those credit customers owe us, increasing the asset. Good. What account do we need next? The VAT, yeah. And what value would we put in the VAT account? Good, yeah. Excellent, yeah. So would it be a debit or a credit in the VAT account? Credit, excellent, yes. So remember, VAT on sales is going to increase the liability that we owe HMRC, because we need to pay that VAT over to them. So we credit the VAT account. And then lastly, we've got this net column. So the net amount, which account do we post that to? The sales account. Brilliant. Yeah. So the 1,300 is posted to the sales account, which is in the income account. So would we debit or credit the sales income account? A credit, excellent. Yeah, good. Yeah, so remember, sales, it is an income account which falls into the click side of our dead and click. So when that income is increasing, we credit the account. So the total of our two credit entries should equal our one debit entry. Okay, so moving on to task 11 now. So task 11 is looking at balancing off the general ledger accounts at the end of a period. Now, just remember, in order to balance off an account, what you need to do is total up both sides of the account. Whichever side has the highest total, that total is entered as the total in both sides of the account. Then the lower side of the account, we need to make equal that total. So we do that by entering a balancing figure, which is called our balance carried down. Then at the start of the next period, that balance carried down, we would transfer over to the opposite side of the account, and it would then start off our next period as a balance brought down. Now, one thing to watch out for is that the balance carried down may sometimes be referred to as the balance carried forward, but it means the same thing. Same with the balance brought down as well. Balance brought down, you may see being referred to as the balance brought forward. Again, means exactly the same. Just always remember that the balance brought down starts off a period, whereas the balance carried down, it closes off a period. So we'll have a look at a task now. The following two accounts are in the general ledger of Purple Limited at the close of day on the 31st of December. And you can see here we've got a bank loan account, and then we've got an account for travel expenses. Part A, what will be the balance brought down at the 1st of January on each account? So first of all, the bank loan account. So if we have a look at the bank loan account, what would the balance brought down be on this account? Brilliant. Yes, £55,700. And just in case anyone's unsure on how to get to that figure, so remember the bank loan account, it is a credit account, it's a liability account. So we would total up the credit side of the account, so £28,550 plus our £30,000, and then we would deduct the debit of £2,850, and that gives us our balance brought down of £55,700. So would it be a debit or a credit on the 1st of January? Yeah, you're right. It would be a credit because it's a liability account. Good. So next we've got travel expenses. So what would the balance brought down be on the travel expenses account? Yeah, brilliant. Yeah, 3,672. So this one, travel expenses, it's an expense account which falls onto the dead side of our dead and click. So we would total up the debit side. There's no entries on the credit side. So therefore, we don't need to deduct anything. We just total up the two amounts. So travel expenses, the balance brought down, would it be a debit or a credit? Yeah, good. Yes, so it would be a debit because it's an expense account. Excellent. And then it says the following account is in a subsidiary receivables ledger of Michael Limited at the close of day on the 30th of April. Insert the totals, then insert the balance carried down together with the date and details, and the balance brought down together with the date and details. So we need to bear in mind that their close of day is the 30th of April. So we've got their account here. So what would we enter as a total in both sides of the account? Yeah, brilliant. Yeah, you're right. So the total would be 9,006. So remember, you would total up the debit side, total up the credit side, whichever one had the highest balance. In this instance, it's the debit side. You would enter that as the total in both sides of the account. But as you can see, the credit side doesn't equal £9,006. So we need to enter a balancing figure in order to make that equal that total. So what would our balancing figure be? Excellent, Catherine. Yes. So it would be £5,506. And now that credit side would equal that total of £9,006. What date would we enter in the account for this balancing figure? So remember, we're closing off the account. Yes, the 30th of April. That'll be the 30th of April. And what would we enter into the details? The balance carried down. Good. And then remember that balance carried down at the start of the next period. What would we do with it? Where would it go? Yes, it would go below the total on the debit side, yeah, and that would be our balance brought down, and the balance brought down is always the same amount that's brought down that. So remember yes, brilliant, the 1st of May. Yeah, well done. So the balance carried down always closes off a period, and then the balance brought down starts off the next period. So well done, excellent. So thank you ever so much for attending this evening's session. Thank you for participating. The session was recorded, so you will receive the recording within about 24 hours. If you do have any questions, feel free to email us at aatrevision@fi.co.uk. I will hold on at the end of the session as well. So if you do have any questions that you want to ask me, please feel free to hang on and do so. So thank you very much. I hope you have a good evening, and I hope to see you all next week as well.